Welcome back to Ferocious Education. This is Ed. Today we're giving an update on UWMC, specifically their earnings, technical analysis, and institutional interest. So let's jump right into this one. So UWMC. I did talk about this one multiple times before. My previous video is in the description below. However, we did receive some news just out of the oven there regarding Q1 earnings 2021. First off, they scored $860 million in first quarter 2021 as a net income and around $49.1 billion in first quarter 2021 as loan volume. Now, keep in mind that $860 million in first quarter 2021, that's actually a record. Now, that itself is 42 times the first quarter of 2020 itself, and a net income that had a net income of $20.3 million. Additionally, the board of directors declared around 10 cents per share as a dividend. Now, a lot of people might look at that and say, hey, it's not a lot, but you're in here for the longer haul. Now, another thing here is the dividend is payable on July 6th, 2021 to stockholders at the close of the business on June 10th, 2021. The board of directors also authorized a share repurchase program of up to $300 million over the next 24 months beginning tomorrow, May 11th, 2021. Matt Ishbia, chairman and CEO of UWMC, said the first quarter 2021 was not only the best first quarter in our 35-year history, but it also marked our first quarter as a public company and solidified our foundation for growth. We believe that we now have the capital, liquidity, technology, campus, and staffing necessity to further scale our business and grow to become the largest mortgage originator in the country. We welcome the shift to more of a purchase market and the pressure on margins as we believe our business model is built to outperform competitors under these conditions. Moving forward, our priorities remain the same. Our people, the industry, leading services we offer to our brokers, and creating a long-term value for our shareholders. So some of the first quarter highlights. The originations of $49.1 billion in loan volume, a 16% increase from the first quarter 2020, and a $42.4 billion in loan volume. Now, total gain margin of 219 basis points in first quarter 2021 compared to 95 basis points in first quarter 2020. Now, the first quarter net income of $860 million in this quarter compared to last year of $20.3 million. Now, increased total equity to $2.78 billion in March 31st, 2021, as compared to $681.5 million as of March 31st, 2020. And unpaid principal balance mortgage servicing rights increased to $221 billion in Q1 2021 compared to $85.6 billion in first quarter 2020. And when you look into some of the quarters, for instance, let's say Q4 2020 in that sense, and Q1 2020, the closed loan volume seems to be somewhere around a little bit of a similar range. Than the net income for the first quarter 2021 is a lot better than the first quarter for 2020. Now, it is somewhat on par, or actually lower than Q4 2020, but you got to keep in mind that it's more of a cyclical as well in some sense, that at the end of the year, a lot of people are also trying to look into the economy growth, and so there might be a little bit of differences there. But however, they have recorded one of the best quarters they ever have so far. And in terms of the current cash that they have the highest cash they ever had, around $1.6 billion. And you're looking into as well a mortgage loan fair value of somewhere around $5.5 billion, a total assets of around $10.37 billion. And so those all numbers coming together do look actually pretty okay. Now, the next thing we're looking into is some of the technology updates, including here continued investment into machine learning and robotic processes automation, RPA, to further advance our operational excellence while driving down the costs. Continue to invest in our technology platforms and on-site teams, resulting in additional operational efficiencies focused on reducing costs, reducing closing times, and increasing loan processing speeds. Next is their continued investments in the cloud, as well as technologies that increase underwriting efficiencies such as automated document recognition and optical character recognitions. Moving on as well, some of the second quarter 2021 outlook. They anticipate that the second quarter production to be $51 to $55 billion in range, with an expected margin between 75 and 110 BPS. Now, the current thing is, as previously mentioned, UWMC will hold a conference tomorrow at May 11th at 10 a.m. Eastern Standard Time. So overall, what we get to see here is that a lot of these informations are bullish in terms of moving forward and seeing this kind of stock in terms of growth. First quarter 2021 seems to be one of the best it's been, especially since its competitors have seen a little bit of a hit. So it's definitely what they're looking at is what they're doing is actually working, and we need to look into the next year, this 2021, to be a record year. And from the looks of it is that it most likely will be a record year. And then looking into institutional buyers. What we're getting to see here on terms of institutional buyers is that BlackRock, for instance, increased their position by 790% on the 7th of May. You're looking into Phoenix Holding, got around 2.5 million shares just today. Cambridge Investments increased their position by around 280%. Sigma Planning added around 31,000 shares. And so definitely institutions are interested about this one, and they're looking at it and saying, hey, we might actually be a little bit mixed on it. Some of them are share selling, some of them are buying, but some bigger names are buying, and that's what matters. Some stuff like BlackRock, Phoenix, etc. So let's jump right into technical analysis now. Now, in the general sense, UWMC has been sliding for quite a while now. It's been sliding for, let's say, 1 to 3 days in general. MACD is showing more of a negative reversal in that sense, and momentum has decreased quite a lot. William %R shows that this one is highly oversold, and the moving averages, they're a bit mixed. 10 SMA is above 30 EMA, bullish, but it's way below the 50 SMA at 806. Now, the big thing about this one here is as well supports and resistances. And so for that, we need to look a little bit into an extended chart. And a big part of this kind of sliding down is that fear of the earnings. Now, even if the earnings come in positive, there might be some momentarily fears, and you need to kind of have the news set a little. Now, in terms of the current resistance on the Fibonacci retracements, you're looking at 798. Above there, 884, above there, 953, 1021, 1120, and 1245, and the current support on the Fibonacci retracements is 660. Now, the current support, looking at it, 660. Above there, which is being tested in extended hours, is 671. Current resistances, you're looking into 696, and then below there, you're looking into 722. Below there, above there, 750. Above there, you're looking into $8. And then from $8, 829 to 842. From there on, you're looking into 902 and somewhere around 933, jumping upwards to 976, $10, and then jumping from there to 1020, almost around $11 and 1245. It comes to the question to Ed, what do you really think about this one? Now, I doubled my investments somewhere around that dip, closer to around the $7. Now, granted, it is now almost sub $7, actually is sub $7, but in terms of taking a look into this earnings, what it's telling me that 2021 will be a record year. Now, they have around $300 million in stock repurchasing programs, as well as they will be added to the Russell, coming on towards the reconstruction there. It has some interesting institutional interests, such as BlackRock, for instance, backing it at this point. And as well, their earnings might not be the best earnings they've ever met, but it's one of the best they have ever recorded. Compared to what they have in the market, it is looking more like an interesting play. And so for that, I do think that I will continue on holding probably for the next year or so, or until, I don't know, retirement, or it reaches multiples where it is right now. But in general, it's a well position to have in a balanced portfolio, and that still remains my opinion. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.